Gold prices are looking slightly soft. The Reserve Bank of India has decided to clamp down on gold imports, something which could have implications if you are planning to buy gold in fiscal quantity. Manisha, Reserve Bank of India, I think, are getting slightly desperate here because all attempts of bringing gold demand is down, and now we understand that fresh curbs could be imposed.
Well, absolutely. There has been very strong physical gold demand coming in from the Indian markets, especially in this week because of the wedding season and festival demand as well. If you look at the kind of premium that the spot markets are charging is at around 800 rupees to 1,000 rupees per 10 grams. The bank's premium has been much higher at $10 per ounce as well. So while there are desperate queues coming from the government and RBI, you already have seen 6% duty on gold imports. And apart from that, banks are now banned from consignment imports. They can import only on consignment if it is for a jeweler who's exporting into gold. So it really does bring that kind of a view into the markets. And the kind of numbers that you have seen in sense of gold imports in the month of April, up 138% as compared to last year, most of the importers are expecting that the month of May actually could throw you a similar kind of number as well because of Akshaya Tritiya and the demand as well. For the whole of 2013 now, the view is from coming in from World Gold Council is that you could be looking at 900 tons plus kind of imports coming into India in 2013.
So it does look like the Reserve Bank, of course, is doing all it can to curb this surging demand for gold, at least in the country. And in fact, the Prime Minister's Economic Advisory Council also today said that containing gold imports is imperative to keep the economy in shape. Dr. C. Rangarajan added that the recent spurt in April gold import numbers is a cause of serious concern which must be addressed.
Demand for gold as an investment depends on the return on gold and on the return on financial assets. During a period of high inflation, the gold becomes a hedge against inflation as the return on gold far exceeds the return on financial assets. Gold can also act as a hedge against fluctuations in exchange rate. It is interesting to see that the surge in gold import in the last 3 years coincides with a period of high inflation in India. In addition to quantitative reduction, if the current trend in the gold prices is sustained or is maintained, the impact on the current deficit will be significant. We must tame inflation. Simultaneously, we need to make the return on financial assets more attractive. This will help in reducing the attraction for gold as an asset. Thus, a reduction in inflation, combined with attractive return on financial assets, could help to contain the demand for gold as an asset.